Hey there, and good afternoon, everyone. This is Trader Tim from eminimind.com doing a Monday market analysis video for the 13th of July, 2020. And interesting morning we had. Kind of started off a little bit sloppy on the ES, and we had a lot of kind of these opposing tails where you've got, you know, topping tail and then a bottoming tail. And then we had kind of this doji candle. This is on the 5-minute chart. Really just not really getting a lot of momentum in one direction or another. And then right at that 30-minute mark, we really started to take off to the upside. And then since then, in the afternoon here, selling off pretty nicely. And we're about 20 or so minutes left before the close. Now, a couple things I want to highlight first on the daily chart. And the first thing is on the SPX, look how we came right up to the close from back here on our high on the 8th of June. And then you can see it here annotated in today's high. And we're close to all-time highs here, but if I move over to the NASDAQ, which has been by far the strongest of the top 4 indices here, S&P, Dow, Russell, and NASDAQ. It's well above its February highs. And notice how with this retracement that I have drawn up, not only have we gone through the negative 23, but we've gone all the way up to the negative 61.8. And that's where we've kind of been met with that selling pressure today. There's a couple of ways you could draw the next retracement. You can go high to high because we broke through the negative 23, in which case, today's sell-off kind of we're already sitting at the next 50%. You can kind of think of it a little bit like a bull flag. So if I take this off the chart, even if I take this one just to clean it up, you can kind of figure this as the pole, although it's not as straight up as I would typically like for a bull flag. But you get the idea. We're moving up, and then here we've pulled back just a little bit, and we could move sideways before going up again. But the other potential is to do a full halfway back. So here was the original anchor point from the 14th of May to highs. We pulled back nicely to the 50, traded up in less than a month to its negative 23, and then just kept going. So when that happens, if we don't stop here at the 50% of the extension, so if we come down and break the about 256 level on the Qs, then you could look for a full halfway back, which would take us down to like 243 area, kind of right in the middle of this cluster that we consolidated for a little bit, at least a week or so, at around that 243. Now we've got a lot of earnings announcements coming out in the next, really the next month, and my guess is things are going to look very different from company to company. Some companies are going to report great earnings, others are going to report poor earnings, but positive like rebound. And so try not to focus too much on what the numbers are with the earnings announcement, and certainly be careful if you're going to be trading some of the more popular stocks, Amazon, Apple, Microsoft, stuff like that, that you're not putting a position on right before earnings, because things can get a little bit crazy. And I mean, you can even see on Amazon here, it pulled back to its 50% here. Not only did it go through the negative 23, through the 61.8, but it just went on a tear. And seeing that selling today, along with stocks like Tesla making a similar screaming run up, and then pretty big bearish bar today. So all of that being reflected in the NASDAQ, with a lot of those tech stocks making up the NASDAQ. But if we go to like the SPY, you can kind of see the same pattern, a bearish bar. Notice that we're not above the swing high yet. Same with the Dow, even lower. It's bar today is well off the swing high from back here on the 8th of June that we were referencing over on the SPX that we touched and kind of made that double top at. And then lastly, the Russell, very, very more like a triangle. And you can see it pretty clearly here. I don't really have to draw it up, but I will anyways. Something like that, where we're kind of coming to the apex. So I'm not prepared to get super bearish and short today. As we were selling off here, I was looking at, okay, is it worth trying to put on some shorts at the close in the S&P? We do have expiration this Friday, so remember, if you're putting on any option positions, the July contracts are going to expire Friday. It seems early, but the first Friday of the month was only the third day of the month, so the 17th here is going to be expiration. So with a pullback that we could get from here, we were up at one point like 500 and change today, but if we go over to the SPY, and I know I'm jumping around market to market, but it's important to compare the different markets to each other to determine, okay, like in the Nasdaq's case, it's relatively bullish compared to the other ones, and relatively extremely bullish because it's so much higher than, if we're using this swing high on the 8th as our reference point. The Nasdaq is, off my screen, whereas the other three haven't even broken that swing high. So if we do get a little bit of a pullback here, yes, we could come down and retest for a third time this 50% retracement, but the first spot I would look for is simply the next retracement off of that 298. So low to high, about a 311 on the SPY if we wanted to throw that on the ES. Be looking at something like this, a 3107 for a pullback. So not looking like overly bearish at the moment. The uptrend is still intact. I try not to project any biases or thoughts that I have into my trading before the chart actually reflects that move or that price action. Meaning we need to break a swing low. We need to break the prior day's low. Somehow we need to break the trend or the pattern that we've been in. If I clean up this chart a little bit, and if we look at just the last couple of days, I mean, even with today's bearish candle, we have not broken any of the prior day's lows here from Friday and Thursday. And so, I like these bearish candles when the following day is backed up with a break of today's low. So as I go through for like a swing trading scenario, if I go through my watch list and look at my weak stocks on that list, then if any of them break today's low tomorrow at the open, then that would constitute an entry into a short. But in the meantime, it's holding its trend, and it is a little bit sloppy, and there have been a handful of gaps and funky little days in here over the last couple of weeks, but by and large things have been pretty decent. As I zoom out to, let's go to like a weekly chart, you can see kind of a consolidation over the last couple of weeks, even though by and large our trend is up, and you can kind of see some of these swing lows that kind of dip slightly below the prior weeks, but not super low. We could draw up the trend line pretty neatly in a number of different ways. You could draw it like that. You could take it from the body down here and go up. But no matter how you draw it, pretty solid uptrend still intact. And so as of right now, potential for a double top, but as of right now, we're just kind of in that flag of the of the bull flag. And I can highlight that, something like that. So here's the pole going up, and then here's the flag moving sideways. So as we go into earnings, this shouldn't be too much of a surprise that there's going to be some gap days. There's going to be a big bearish candle like we have today, followed by could have a big bullish candle tomorrow, kind of like back here where we've got big body candle to the downside, followed up with big bullish candle to the upside. If we were to break on the ES, if I go back to my daily chart, if we were to come down and break that most recent retracement, so I would consider that from this swing low to high. I mean, you could come in and draw the little guy here, but we're basically at it. Like that's where we're sitting at. Markets, well, we got another 13 minutes to close. And so the 30.79 is what I'll use as my line in the sand. If we come down and break that, that would, we would have had to break the swing low up here at 31.07. And then I would consider, taking a short on a bounce up to the 50% short. But in the meantime, mostly going to be day trading. I haven't taken a ton of swing trades over the last couple weeks just because we've had the 3-day weekend in there, and it's just been much more conducive to day trading on the ES. So if you want to tune in, actually tomorrow we'll be doing a live trading session, Tuesday. Just head over to emoneymind.com/VIP, and you can log into the session tomorrow morning at the open. I'll have my charts pulled up. I'll I narrate as best I can my thoughts as I'm going through my trades, and you can ask questions, and good interactive session for the morning tomorrow. So I hope everyone has a great week. Stay safe out there, be well, and I will talk to you soon.